Hello, Paul Gerard again from Price Accounting Services. Today I want to talk about the tax return label for claiming a tax deduction for a superannuation contribution. Now this sounds like it's such a simple issue, and it's far from being simple, okay? For the 2017 year, the old rules continue to apply, and that is the only people who can claim a tax deduction for additional or voluntary super contributions are those people who are not employed by an employer and who receive no employer superannuation support. There's a thing called the 10% rule that applies. So for example, if you're not employed and you're aged under the relevant age, then you may be able to claim a tax deduction. It's not that common, but when it is common, it tends to be used as a very effective mechanism to claim larger deductions, $25,000, $35,000, but the deduction must have been paid prior to the 30th of June. That's the first condition. The second condition is that you are eligible. And there's a series of steps, I would argue, that should be explored by either your financial or your tax advisor to determine whether you are eligible to claim a deduction. Then the third step is you must complete the relevant paperwork to ensure that you have a valid deduction prior to lodging your tax return. There is a specific provision in tax law that says that if you're claiming a tax deduction for personal super contributions, you must advise the fund and they must acknowledge in writing that that is the case. Now, tax law says that that notice must be received prior to lodgement of your return. So it can't be fixed later. If you lodge your return and you get it wrong, the tax office are very ruthless on this one. They just deny the deduction. Now, there are ways that a legitimate deduction can also be tainted. And this is why I said it's really important to get your tax or your financial advisor on board with this one if you think you're eligible. The key issue surrounds this. Tax superannuation law says a concessional contribution, and that is what we think of as a tax deductible contribution. Concessional contribution is limited to the extent of the taxpayer's taxable income. So what do I mean by that? So let's say that Joe has a taxable income prior to, let's say on the 28th of June, he's looking at his likely income for the year and it's $30,000. He cannot contribute $35,000 as that. A, would create a tax loss, but B, it's also very inefficient because between 0 and $18,200, his tax rate is 0. So we need to be a bit smarter about this and only claim enough of a deduction to bring him down to around $18,200, and that's not a golden number, by the way. So again, really key to have your tax and financial advisor on board so that you correctly claim this sort of deduction if you're entitled. The great news is in 2018, every single taxpayer, provided they meet the age requirements, can claim up to the $25,000 concessional limit. So the days of being subject to this 10% rule or an income test are over. Any employee can, in total, from all sources, contribute up to $25,000. So it broadens the base for people who can claim more deductions. That's something to really discuss with a tax advisor and a financial advisor prior to making that choice. The good news is, at Price Accounting Services, we're not licensed to give financial advice, but our colleagues at Price Financial Intelligence, who we work closely with, they are. So it's really common that our clients get this joint advice. And so if you're ever looking for a tax advisor, or you don't have a tax advisor who can provide that joint financial and tax guidance, this is no better example of the time to start to make the change, because even the government in their law change recognised the importance of aligning your financial objectives and your tax objectives to save tax and make retirement more profitable, more achievable. So I'll leave it at that for now. That's D10 cost of deductions for super. So if you're interested in talking to us, call or email, happy to chat. Have a look at our new client video if you're not already a client, and we look forward to seeing you in another session. Cheers, bye.